Happy Friday, everybody. Chris here with your market update. And you've been hearing me talk about this a lot in my videos. The labor market is, in fact, the biggest driver of what is going on with mortgage rates. And we saw a little bit of softening in the labor data this week. We saw the 10-year Treasury dip down. It was above 4.2. As of the end of the week here, it is below 4.2. Mortgage rates going from roughly 6.25 to about 6 1/8 here towards the end of the week. Of course, we're still locking a lot of stuff in the fives. But in addition to labor data, the second main thing that drives interest rates, well, is Federal Reserve policy. And the current administration just nominated someone who a lot of people thought of as a hawk, or someone who's more about higher interest rates to fight inflation than keep interest rates low for growth. So what is going on, and how, in fact, could we see mortgage rates go down when we have a more hawkish Fed? Well, one quick answer, and I don't know the inner workings of the current administration, by the way, at all. But one quick answer would be through bank deregulation. And they have talked a lot about that, not only with the current administration, but also at the Fed. Because as the market has a harder time absorbing all these 10-year treasuries specifically, and that is part of the reason interest rates are higher right now. Well, if you deregulate banks, they can buy a heck of a lot more of them. And so that would add a major buyer to the international markets for the buying and selling of mortgage-backed securities and treasuries. So bank deregulation could be one of the answers in getting long-term interest rates, specifically mortgages, lower into the rest of this year. But still, it's the labor data. So if we continue to have softening in the labor market, and we have a huge jobs report coming out next week. So we'll see firsthand, next week what the job market is doing, how it's performing, and as a result, we'll see what interest rates do in response. Thanks for watching, and happy Friday.